All right, hello everybody. Welcome to the trade findings and adjustments from Hurley Investments on June 6th. I'm Keith Bybee again with you today. It's good to see you guys out here again and listening in. I have up here our Tuesday night trades that I had suggested. So first, I want to ask if anybody had tried to put these on, or if you are still waiting, or what kind of questions you might have about them, if so, and let me know. How did it go? Is it looking terrible? Are you pissed off at me? I don't even think much has changed. So just look at Facebook quick. Facebook's been flat. My guess is that we may get another test down here at maybe this pivot point at 164, or of course this 200-day moving average at 161.27. But if you had put that on, you're probably still just about at break even, which going out to September I think is just fine. And as you remember, really just trying to see if we can't find a bounce back up to test the 50-day and then be out of that. So any questions so far on that one? You could still put that one on if you missed it. Excuse me, I'm dealing with some allergies today with the cottonwood trees out here in Utah blowing all of the cottonwood around. So bear with me. Facebook, we did a September 180 strike long call against a 190 strike short call for a bull call spread that cost about $3. I think it's a little cheaper now. It's probably like $280 or something. We also did the QQQ bear put. Our argument was, if we continue to get any bad news or get kind of swung around by retail trading through the doldrum months of summer, that it wouldn't be a bad idea to have some protection. Let's see. So this one, you could effectively do the same thing and it'd be much cheaper. You could go closer to the strike. Actually, let's review like we did with Facebook. So we had looked at a September long put 174 strike, which on Tuesday was pretty much right at the money, and went down to a September short put 165 strike for $4.16 for a cost basis of $3.04. So if you did that same strikes, you'd be cheaper today, but a little further out of the money, which not necessarily a bad thing. Markets are still trying to but they're still trying to hold up that 200-day moving averages and kind of stay above them. Just to check on our market real quick. S&P still holding nicely. Nice bounce there. Pretty much only 2 days under the 200 and a nice bounce. Looking at the Dow Jones. Oops. I think this site likes it when you put into. And holding our 200-day as well. It didn't do quite as good as the S&P staying above our 200, but like we talked about Monday and Tuesday, we were looking to see the markets fight back a little bit, just being so oversold. And then going to my predictive text is not helping me today. And same thing there. So if you had put that trade on, you're going back to the QQQ. Actually, I already have it over here. What am I doing? If you did put that trade on, you'd have gotten a little cheaper, or you would have got about the same cost basis, and you'd be looking at your short put option helping you out a little bit, not a ton. Not to the point that you'd be canceling it for a great profit. So, again, the argument for a QQQ bear put was after we've done all of these trades, and maybe you've got a lot of bullish positions put on, or even if it's a bull call and you've had some hedging position. I know on we'll get to Baidu in a little bit, but dollar cost averaging and lowering your cost basis there, and so you might have a few of those types of situations on still, and thought it might be a good idea to just have some level of protection that would be one position that could kind of hedge the rest of your portfolio if you got some of these spread trades going on. And that was the idea behind the QQQ bear put. QQQ is the ETF that follows the NASDAQ. Any questions about those guys? So again, if you wanted to do the Facebook, let's just check our current prices. And this is kind of repetitive for those of you who were there Tuesday, but for those who weren't, Facebook, going back, what I liked to see on Facebook was a little higher volume here on a strong buy the dip sort of thing on Tuesday. Let's see, that was Tuesday, this was Monday. And a very strong looking like buy orders there with big volume. So that looked promising. If you still wanted to do that one, you could certainly do it. And we did the 180, 190 out to September. So we get down to September. That gave us a little more time. And this was kind of something I just thought, obviously, if you're in your leap long call positions, you certainly could go and add to those and lower your cost basis if you wanted to at around 200 we had done some, and I know Kevin's on his account is 210. I'm not even looking at the correct date for those long calls. So here they are. So they're super cheap now. So 860, and he had a cost basis of around 1700 or 17. So if you wanted to continue to try and follow that, it's not a bad time, I don't think, to dollar cost average that position. But so my thought here was for out to September, if you hadn't done that long call position, or even if you wanted another way to kind of dollar cost average that, you could do this out to September. It gives us time through the summer to look for a pre-earnings run. Again, the chart looks pretty decent with a strong support level. And the other justification was a lot of the FANG stocks had shot down the beginning of the week because there was talk of antitrust issues from the DOJ, and Facebook fell like something like 6%, and the others fell like a couple percent. Your Google and Netflix and Amazon, and so of those, Facebook got hurt the worst, and really it's kind of ridiculous to fall so much on just a news headline. Any antitrust proceedings take years, and I don't think Facebook is going to necessarily have that kind of regulatory issue. What they will probably have, and that they've had in the most recent past, of course, is their privacy issues on the actual their platform online. So they've had some good earnings to show that they can kind of deal with those issues. They're spending more money on security and privacy, so they don't have data leaks and that kind of thing. So again, we went out to 180, 190. That was out of the money. To make it a little cheaper, I left it up to you to go closer to the money if you wanted to. Obviously, it's just going to be more expensive. So about $4 instead of about $3. So the prices are pretty close to the same. We're at $730 and $425 on the 190. Any questions, guys? If there aren't any questions, I'm going to go ahead and erase this. And look at possibly adding to our Baidu position. Baidu, September roll call. So if you remember, we have dollar cost average this one. It's no longer a bull call because we don't have a short option on top. However, we closed our short option to effectively add triple the amount of contracts to lower our cost basis from way up at like $8 way down to $1. And at this point, Baidu is trading, or at least those contracts are so cheap I don't know why we wouldn't want to go out and lower cost basis again. Obviously, we're not going to get help from a short, cashing in our short option, but if we could get a fill of around 5 cents, you'd have to set a limit order, obviously. But our 180 September long calls, you could dramatically lower your cost basis from $1 probably down to 50 cents or more, depending on how many contracts you added. So this is what I wanted to talk about today. So if you weren't here when we talked about this before, when we closed our short option and added to our long position, you can go back. I think it was, actually had it open here. So it was trade findings on the 21st. I go through all the math for you, just so you can see. So September 180s. So it'd be these guys. Question from Abraham: what is your expectancy on FIDO behavior the next 6 months? Well, that's a tough question, but I would expect it to do extremely well and pop back up amazingly well if we get a trade deal. Along the way, we'll probably, even today, we had Trump say that he's fine tariffing the 300 billion. The good news is that there wasn't really a big reaction. Part of that is because of the Fed coming out and saying, we're going to try and do what we can to look at the markets and help out where we can there to ease the risk and look at the possible implications of trade war and helping out there if we have to as well. So the way the market took that was, oh, well, maybe there is going to be a rate cut. And a few of the other Feds came out and were kind of, obviously they never say one way or the other before they really come out and say things and have their meeting and whatnot. But a lot of them talking like a rate cut is certainly a possibility if need be. So I guess I'm rambling on here, Abraham, but it really depends on our trade issue. And I think the chances are really good that it gets through eventually. It's just that time in between where we're just kind of in limbo and waiting for it. So again, but today we had another comment by Trump saying, he has no problem adding tariffs on another 300 billion. We didn't really get a reaction from that. Again, part of that is the market hoping for a rate cut and kind of being okay, sitting tight since everything fell off so much as it was. But I like that there isn't a huge reaction with Baidu today on that. That looks nice. And technically, we've got so much oversold. All right, Abraham, my doubt is on how much it can still drop. So there isn't a good technical support in our history other than what we're building as a base right now. So how much could it still drop? It could still go down to 100 to get an even number. It does look like it's, at least this week, kind of establishing a support level. But let me walk you through what I'm looking at. If we're going to continue to try and manage the trades that we're already in, yes, at some point we could actually just do a whole new bull call at a lower cost basis, and that's something that I feel like we could wait a little bit more for. So right now, because these options are so cheap, and if you can get a limit fill of 5 cents, here you're seeing our market 5 cents. There's really not a ton to lose. I guess a ton more to lose. So just going through the numbers, I'll just do this. So around 5 cents. So let's go through the numbers again. We have 20 contracts. If we went to add double the contracts up at 40, just to preview, our net spend is $200. So go through the math. $200, our cost value is $29.43. So that's all of the money that we put into all of the positions, right? And that doesn't even include, actually, I guess we got to go back to our other one to see our total cost value. So 2019.08 is our total cost value, because this right here is only adding up all of the long calls that we've spent, but it's not telling us how much we made up from our short call positions. So to go through the numbers, so $200. Just have a chart up here. So our cost basis $19.08 plus the $200 is pretty simple. Take that number, divide by total number of shares. Now remember, it's the shares. You take your number of contracts, you put 2 more zeros on it. So the 40 more contracts plus the 20 is 6,000. Which brings our cost basis down to 36 cents. So my thought, Abraham, was we've only got 5 cents more risk that we're adding per share. We're lowering our cost basis from $1 down to 36 cents now. Gets back up to 120. I think we're actually profitable at that point. Let me see. Delta of 0.008. So terrible delta, but again, if at any point we get any sort of good news and it bounces up, we're in much better position to be profitable. So we would need to probably get up to 120, as that's where our 34-cent delta is. And actually, I'm totally looking at this wrong. Looking at it backwards. So you'd need it to get up to your 180. So I'd say if it got up to around 120, we'd be pretty close. Just looking at some of the way things are priced right now for out of strike calls. So that's not bad. Let's see what our math is just for the heck of it. for 50. So same thing, plus 250. 2019 plus 250 is 2269 divided by 70, 100. That doesn't add too much better cost basis, so that's a 32 cent as opposed to a 36 cent. So if you really wanted to lower it more, you'd have to really kind of get crazy. So I'm just really looking to $200 to dramatically lower our cost basis, and not a bad idea. And again, we can look at adding another bull call position down lower in strike, but that's kind of more adding more risk at a time. It just seems a little more reasonable to just be helping out this position. Again, we're not getting our short calls doing any favors, but because we don't have any, we're adding cost to the position to lower our cost basis. So I am going to send that in. This is Kevin's account, so hopefully he doesn't get mad at me. Keith, what the heck are you doing? But if we can get filled at that price, or even 6 cents is not really that big of a difference, you could go up to there too, as it was sitting around 6.5 cents. So leaving that on for the day to see if it gets filled, and we're good to go. Guys, any more questions, thoughts, other trades you wanted to look at? Keith, this is a stupid idea. Tell me why. Going from $1 cost basis down to 36 cents seems like a no-brainer to me for $200. So I do like to see how our markets have responded to our being oversold, but at this point we just need some good news on the trade front. We also had the tariffs to Mexico, which is a terrible idea by Trump, as we don't have the same leverage with regard to Mexico that we do with regard to China. And he's just trying to use some sort of tactic to get them to pony up for our border wall, helping out with all of the illegal immigration, especially on their own southern border. Ida asking, are these trades on the Hurley Investment or Hurley Investments West.com website? So this is, you'll see this. So sorry, Ida. That's why on Tuesday I was waiting a little longer afterwards to let people take screenshots or a picture with their phone if they needed to, because I don't have the ability to post this stuff on the myhurleyinvestment.com website. But on Baidu, our former position, you will see that on the 21st trade findings on May 21st. Excuse me. That's what this is. You'll see that in all of our numbers. But no, I don't have the ability, and I hadn't thought of it until after Kevin went out of pocket. So it's just going to have to be you taking a screenshot, writing it down, taking a picture with your phone. But I'll leave this up for a little bit. Any other questions, guys? I lost my train of thought what I was going to write, but probably doesn't matter. I was just going to say $200 to lower our cost basis from $1 down to 36 cents. Seems like a no-brainer. I have taken screenshots, but it'd be nice to have a continuous performance record somewhere. All right, sounds good, Abraham. So Ida, these are ones that I've suggested. So it would just be if you had followed my suggestions, then you would have a record of that. A few of my other trades have done pretty darn good. But again, don't have a record of those unless you yourself did them and came back and said, hey, thanks, Keeve. As I don't normally just put on trades for Kevin's account. Just in this case where we already have this one, I kind of think it is just a no-brainer for risking $200 more to dramatically lower our cost basis in case we get a bump of any kind on Baidu. So any more questions, guys? Some of the other trades we had done that I had suggested, Ida, were this Disney call, but at a lower strike at the time I had mentioned it, and Kevin had put it on himself as well. I did another trade. I suggested a forward covered call position of buying stock and covering it to get a dividend payment as well as a pretty easy 30-day trade that you could book some profit on your short call position as well. Oh no, it's no extra work, Ida. It's just trades that I had suggested that hadn't necessarily been put on in our little trading account we have here. It's just there's no way to account for it unless you actually did those trades. And but if you had, you'd notice that they went well. So, any other questions, guys? if not, that's it for me. Thanks for joining me for a little bit. I appreciate the support, and it's nice to be able to go over this stuff with you guys and talk through it. Helps me. It's a little weird sometimes to try and add even simple math and talk and write at the same time. So I apologize if I say some wrong numbers here and there. So thanks for bearing with me, and thanks for joining me. And I think I'll probably be on Monday as well to take over for the Monday night commentary for Kevin as well. So I will talk to you then, and have a good Thursday and a good weekend. Take care. Bye.